Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me is Miles Tuck, partner with the Strategy and Transactions Group at Ernst & Young. Miles, it's great to have you with us. Welcome to Trade Talks.
Hi, Jill. Great to be with you.
Since 2003, the biannual Renewable Energy Country Attractiveness Index has ranked the top 40 markets based on investment in renewable energy, a key part of the energy transition. Tell us about the methodology and what the genesis was behind the report and who the top performer is.
Sure. Over the past 2 decades, renewable energy has grown tremendously. And we expect that this growth will continue given all of the focus around decarbonization, which is really intensifying across all sectors and around the globe. What's really important to note is that based on a recent estimate, there is a need for more than $6 trillion of CapEx, and that's an enormous number, and it represents huge potential for investors throughout the globe. And so the genesis of the EY Renewable Energy Country Attractiveness Index is to rank the top 40 markets on a relative basis on the attractiveness of their renewable energy investment and deployment opportunity based on a range of factors. So we evaluate energy policies, we evaluate pipeline of projects, availability of capital, diversity of renewable sources, and the infrastructure needed to support clean energy growth. The US is ranked number 1 in the index, and that's a position that the US has held over the last year. One of the key factors that's driving the strong performance of the US is the Biden administration. And the key reason behind that is the US is pursuing a new era of clean energy policy at the federal level to decarbonize the US energy system and to align with standards under the Paris Climate Agreement, which we've re-entered this year. So as an example, the federal government has announced goals to cut greenhouse gas emissions 50 to 52% by 2030 and 100% carbon-free power grid by 2035. And the main takeaway here is that this will drive increased investments into the US. The energy transition is inevitable, and investors are viewing the US as a sizable market that is transparent with strong market rules and designs that's attractive from an investment perspective. Therefore, it was ranked the highest in our recent report.
Miles, what are the challenges with this race to net zero? Are governments and organizations, companies doing enough?
Yeah, I think, if you look at the year-over-year growth on renewables, it's impressive. We've had pretty significant increases in growth, but in the overall scheme of things, it's still a small percentage compared to other resources of US generation mix. And one of the key challenges is to really achieve the scale that's needed so that we can do that in a balanced way across all of the various options that are in front of us. And there is also the challenge of the enormous amount of capital that's needed and the associated gap in capital. So for example, EY estimates that the future global renewable energy deployment has about a $5 trillion investment gap or challenge. And so this is based on the International Energy Agency's current policy scenario, which indicates around $8 trillion is committed to renewables energy, but about $13 trillion is required under the Sustainable Development Scenario. Clearly, this is a significant gap to be filled. And in order to attract the massive amount of capital that's needed to achieve meaningful scale, investors want clarity, wants assurance, wants a fresh policy that's going to breed sort of confidence in that investment. And so we really need the federal, state, and local government and policies and incentives to spur new research, new development, opportunity to invest in large-scale projects. And, I think the opportunity is ripe to do that. A failure to act with comprehensive legislation will have delays, continued delays, and will restrict the flow of capital that's needed to achieve clean energy sources of energy.
Switching gears to power and utilities transactions and trends, what does deal making and M&A look like in this space? Where are the hot spots for deals?
Yeah, we're seeing lots of deal activity on the renewable energy sector. In our latest EY Power and Utilities Transaction and Trends report, we saw that the energy transition agenda has helped push global power and utilities deal value to its highest level in the past 3 years, to the tune of $70 billion in Q1 2021, and that's up 20% in the US in particular. Overall, the market fundamentals for power utility sector remains attractive due to the considerable amount of capital that's needed. And that capital is needed to harden our systems under extreme weather and storm. It's also needed to modernize our aging infrastructure on the electric, gas, and water side of things. We also need enormous amount of capital to enhance our system from a safety and reliability perspective. And also the opportunity to electrify and introduce clean energy to our grid system needs enormous amount of capital. And so the trends that I'm watching, the three important trends, number one is that we're expecting to see enormous amount of inbound transactions into the US. Historically, we've seen inbound transactions from Canadians and European companies, as well as financial investors, looking for opportunities here in the US. And we're going to continue to see that, but we're going to see a more aggressive pursuit from Asian investors, as well as the traditional Canadian and Europeans coming into the US market. This trend of inbound transactions into the US will really be accelerated further under policy changes that are coming from Washington, right? So for example, under an investment plan currently in play, there is a proposed $100 billion investment in power infrastructure and $174 billion in electric vehicles. So this is really setting very strong targets. There's also aggressive push towards offshore wind here into the US. And that's going to present a lot of opportunities for investors from foreign locations, as well as financial sponsors, and even oil and gas companies to come into the power and utility sector. Related to power utility sector and oil and gas, the other trend that we're paying close attention to is the convergence of sector. Sector convergence has been on the rise globally. And this trend will continue, in particular, as you think about opportunities like offshore wind, as you think about opportunities in clean energy. It's going to be driven by a lot of the focus around ESG, which is attracting various forms of capital, including private equity, infrastructure funds, and oil and gas companies that are looking to come into the sector. So sector convergence is a second theme that we're staying close to. And then finally, the final point that I'd like to make is that, as it relates to M&A in the power and utility sector, we're going to see more creative and flexible transactions that's going to attract low cost of capital. An example of that is, we recently observed a number of transactions actually, where power utility companies are selling off an equity stake in their subsidiary, which is a move designed to strengthen their balance sheet and also to boost their earnings so that they can, leverage some of the attractive valuation and efficiently deploy capital into some of the emerging technologies and renewable energy space. And we've also witnessed some transactions involving asset swaps and spin-offs. And so these demonstrated flexibility in transactions is another theme to look for into the year.
All right, well, it's certainly encouraging to see renewed focus back on clean energy. Miles, thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thanks.